Hi, this is Zach Meir with the weekend edition of the Bulletin Board Heroes here at Vox Markets. It is Saturday, the 5th of March. Horrific times outside the markets, and obviously horrific times for the small caps and inside the markets too. So most of the stocks here are either repeats of recent winners or hopefully the best of the bunch. We'll see whether that pans out or not. First up, Arc Minerals, where it looks as though we're in this rising trend channel from July. Still well above the 50-day moving average at 3.1. While we hold that, looking for 6 pence at the top of the rising July trend channel, and that could be seen perhaps by next month or hopefully when the current dust settles. Got an uptrend line in the RSI window as well, which is so far holding. Near term, we'd like to see the shares at least, ideally they would stay above the 200-day moving average at 3.62 pence, or at least around that level before heading higher. On to Angle, where I suppose there are hopes that the FDA might do something positive here. Clearly, if it does, that would be a big win for the company, and we would see the shares bounce off recent support in the low 70s. Initially, though, even with or without that, still looking for maybe the low 80s, given the way that we've double bottomed in the 71 pence zone over the last couple of weeks, and also the shares very oversold now. RSI well below the 20 level, and we have a falling RSI support line there as well. So just a hint of a rebound, whether it's fundamentally or technically triggered there. On to Audio Boom, where you can see that shares are still trading around the bottom of the gap there, that high of that day, 1785. So basically, while we're at 1785 or above, looking reasonably healthy. Obviously, there was a dip to 1735 on Friday. Further support at the 50-day moving average at 1685. Which was actually the support that we had back in January, and has effectively been the support area since, I suppose, over much of the past year. So if this is a weak, obviously a weak stock market in general, maybe there is a risk of a test of the 50-day line, but ideally the shares would bounce off that relatively quickly. Support line in the RSI window as well, so we're near that too. We could say that we've actually bounced off that as well, finding support at that. So Audio Boom is still looking on for the 24 and then 34 technical targets over the next month or two, and ideally, as I said, no sustained price action below that gap. Moving on to another of the recent decent movers, Bushveld Minerals. 15p target there, technical target there, just above. Well, I suppose that's actually the gap that we had from the end of June, so still looking for that, especially while we hold above initial March resistance at 12 pence. And ideally, there's no price action below the 200-day line at 11 pence 15, maybe for the end of the month on Bushveld. Ben's Creek, one of the heroes of the year to date, and I suppose before that as well, since October. Nice little bounce there off just the sub 70 area, so that was the last peak at the end of February, became the new support. So still on track for our £1 zone target, especially while we're above the low 60s, which was, let's say, later February support or resistance rather for the shares. Moving on to a stock which is new to me and maybe new to you as well, Clean Power Hydrogen. Obviously ticks all the right boxes in terms of the sound of the fundamentals there. Lots of green candles over the last few sessions, which is a positive. We've got the 50 and 200-day moving averages rising as well. Above the initial resistance there at 66, looking for perhaps 90, 95 at the notional top of a rising trend channel from the beginning of last month. So that's the guess of how wide that channel is. And with these solid blue candles, it looks as though the mid-90s is not going to be difficult for Clean Power. Onto a stock which has a rational reason for rising at the moment. We've got Golden Prospect breaking that line of resistance again from May, yet again at 43 pence, and also closing above the 200-day moving average, which was nice. Initial target here up to 51 pence, and then obviously 62, which is post-June resistance over the following 4 to 6 weeks. This stage only well below the rising 50-day line at 42 pence, really delaying the upside scenario. Rising 50-day line at the lows or near the lows tends to be a decent reversal signal. On to Galileo, which has, I suppose, outperformed a horrible market of late. Still just up on the rising 50-day line, which we like, near the lows. We've had resistance at the 200-day moving average, so maybe that's the area to beat. But above 1.2 on a end of day or weekly close basis, and we can see the shares up to 1.9. Support at the moment just below a penny, so maybe allow for 0.95 pence as a stop loss there. But great news flow so far this year, and one would expect there to be something fresh pretty soon, as there always is with the Colin Bird stable. On to Eurasia, which left me looking at the 8p gap floor, which is from a couple of years back. A bit of an overshoot on the downside, not surprisingly, down towards 6p or just below, but a bear trap rebound from below that initial March support. That was at the 6.25 level. So there's just a glimmer here that there's a bear trap and the shares could at least head back to double figures, even if they then fade away again after that. So as I said, slightly better look there to Eurasia at the moment. Moving on to Jersey Oil and Gas, which is a rather more straightforward breakout there. So nice breakout through February resistance in 1.147 area. Nice bull flag breakout as well to start the month of March, and above 172 initial resistance, looking for 240 at the top of that rising trend channel from back in May last year, maybe hit as soon as the end of next month. Just a few stocks to go now. First is MySale, which had quite a ride higher at the end of the week. Key reversal to the upside. Good bullish divergence as well after the old bullish divergence actually failed, I suppose, or RSI support line failed back in January. So we've got an uptrend line there. We've also broken a line of resistance from the beginning of last month. Let's call that at 2p, and above 2p, looking for at least the 50-day moving average at 4.38p. Pembridge, I know it has some fans, so worth looking at it now. A bit of bullish divergence here, bear trap as well below the 4.55p level. So bullish divergence like that, and we've got a support line that one can draw, I suppose, from back in September. So bouncing off that and breaking a falling wedge, or we could break a falling wedge pretty soon with any 4.55p plus end of day close. Initial target would then be 6p. Finishing off with the Euro Metals, and here bullish divergence with a bear trap from below the old 153 December support. So that just lasts a couple of days. Bullish divergence as well, breaking a line of resistance from back in August. So that was around the £1.62 level. Well above that now. So really the obvious thing to look for now is January resistance around £2.38, perhaps as soon as the end of this month. That's it for me today. More updates next week.